All right. Welcome back, my friends. This is episode number 31 of Real Estate Bites. I would come at you every Friday here live on Facebook, Twitter, and LinkedIn. Thank you guys for watching me again here this Friday. The topic of the week: when are home prices going to come down? But before we jump into that topic, as always, let's take a look at our statistics. All right. Current homes on the market in Lorain County, 317 units are currently active and for sale. That is the lowest inventory that we have seen since I started recording these statistics back in August of last year. This number is, we're going to come back to this. When I get into the topic of the day, we are going to talk quite a bit about inventory. All right. So the number of closed units last week was 68. The median square foot of each house sold last week was 1,736. Median home value, $254,950. The median square foot price was $162.05. The sale price to list price ratio was 99%. The average days on market was 47 for the home sold last week. And this morning, a 30-day conventional mortgage was at about 7.10% interest rate. And then finally, our high sale of the week was $725,000 in Avon Lake. And let's take a look at that beauty here on Greenbrier and Avon Lake. 4-bed, 3.5 bath, 4,000 square feet on nearly an acre lot. Look at that big brick beauty. We'll take a look at some of these pictures here. Nice home, very large home in Avon Lake. Huge master bedroom. Look at the master bath, about the same size as the kitchen. All right, well, that's about enough of that. Let's jump back into our statistics. Okay, so the topic of the week. You know, I hear with some frequency some version or variation of the question, when are home prices coming down? Housing affordability has been in the news a lot because, well, housing is not affordable anymore for a lot of people. And the reason is simply this, okay? This is what's happened to home prices over the last 10 years. You can see the steady up and up and up and up. Yeah, every once in a while, you got your little dip. This is usually wintertime is when you see your dips, your troughs. But gradually, prices have just continued to increase. And, you know, if you look over the 100-year chart from NAR when they really started recording home sale statistics, it looks like an ascending staircase from the 1910s or 20s, whenever they began, all the way up to current day. And the only time you see a really big dip was in the 08-09 Great Recession, right? That's when home values really took a large dip. But you would have, you know, every a 7-year increase in values and then a leveling off for 2 to 3 years. You know, sometimes there'd be a slight dip, nothing like 08-09 through 12. But generally speaking, you have this staircase look. But this is what home values have done. And, you know, home values are, I mean, at an all-time high. And it is difficult for people to afford homes because wages have not kept pace with inflation, have not kept pace with the appreciation of home values. And, you know, one of the things that I listen to some national pundits, some brilliant speakers, watch some podcasts, and they take a look at macro effects on economics and everything. And My contention, as well as many others, is it's an inventory thing. And these people, I just see a lot of pushback from some people who I have a tremendous amount of respect for on the inventory narrative, saying that that's not everything. And, in all economics, and, caveat here, I am not an economist. My expertise is in selling properties and in working with my team to strategize on the best ways to serve our clients, to sell properties long-term and have wonderful lives with our families. That's my expertise. I am not an economist. But these economists, they're going to look at price discovery and all the nuances and blah, 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 and try to figure out all the variables that went into why prices do what they do. I think it's pretty simple here in real estate. When you have, I'm going to show you a chart here. This is inventory. So as we saw in this week's stats, right? Inventory today, these are the amount of homes and condos for sale at Avon Lake at 8 a.m. this morning, 317 listings. Okay. So I want you guys to take a look at this chart right here. This is the historic count of active listings in Lorain County, right? Same thing, houses and condos in Lorain County. Okay. So to give you some context, again, 317 houses as of this morning, March 1st, 2024 in Lorain County. Well, in March of 2019, there were 1,023 active listings in the month of March. Okay. That is an incredible decrease, an incredible change in inventory. Okay. So take a look at this. Here is the price inventory trend. You can see here, the prices continuing to go up and up and up as inventory went down, down, down. And the reason why the correlation is that simple, and inventory is the simple answer to housing affordability, is because of this chart right over here. So what this shows is the historic count of active versus sold. Now, again, guys, this is Lorain County, right? And there's much more volatility, and it's much more extreme on the coasts. And when you watch national news and they talk about real estate, they're talking about San Francisco, LA, they're talking about Austin, Texas, Washington, DC, New York City, Miami. They're never talking about Topeka, Kansas. They're never talking about Peoria, Illinois, or Indianapolis. They're certainly not talking about Cleveland, Ohio, right? You have to look at local news to get that. But the fact is, this is a nationwide trend. Nationally, home sales were less than they've ever been before in 2023, right? And inventory has also been less than it's ever been before in 2023. This is the nationwide story. So the purpose I'm showing you this chart here, again, this is the historic count of listings, which we saw, right here, same green, same chart. Okay. However, this one shows you, so that's the supply side in green, and it shows you the demand side of the equation here in blue. This is the historic sales. You can see it obviously always dips in the wintertime, peaks in the summertime. Now, 2023 was, again, lowest amount of sales on record. However, look at how flat the blue line is compared to the green line. So yeah, demand took a hit last year, but nothing in relationship to the decline in inventory. So when demand stays generally the same, however, inventory decreases to such an extent, this is why we've had the issue with home values increasing and why home values are going to stay high, because this demand, even if we match the all-time lowest sales record, right? And again, that was all time last year. Even if we match that, it's still pretty flat in demand in comparison to inventory. And inventory, as you saw from our very first look at our statistics, inventory is not going up. Okay. We have been under 400 homes available at any given time in Lorain County since the beginning of the year versus over 1,000 this time of year just 5 years ago. All right. So who's buying these houses? Obviously, the people, friends, family, your regular shoppers, they're buying houses for all the reasons why people want to buy houses. Investors have also bought homes. This plays into it big time. So take a look at this chart. Now, this is national. This is not Lorain County. I got this chart from CoreLogic. CoreLogic is basically a huge database about real estate numbers and data. And this came from investors. These are monthly purchases. You can see they're in the tens of thousands by investors. So take a look here. Pre-pandemic, you see a pretty flat line. Post-pandemic, specifically 21 and 22. I mean, if you add these up, you can see you've got small, medium, large, and mega investors. And if you add these up, in the summer of 2021, you're talking about 130 to 140,000 homes a month. 130 to 140,000 units a month are being purchased. That equals millions of units, right, since the pandemic that have been bought up by investors, small and large. So that is where a lot of inventory has gone. Also, when you had all-time low interest rates, well, people could afford homes that they never could before. And I mean, all of us agents were a part of it. If you watched the news at all, you saw it. It was a bit of a feeding frenzy with cheap money. Okay. So where's the relief, guys? Where is the relief? That's the great question. Inventory is the name of the game. And until we have more, home prices are not going to change. Until there is more supply to balance demand, the prices simply are not going to come down. Now, how do we get more inventory? I can only see two real ways that more inventory would come online in a quantity sufficient enough to make a big difference in home values. Well, I guess three, but the first one would be home builders catch up and build millions and millions of units over the next year. But I mean, if that were the case, it would probably be happening right now. Their costs are higher. The homes they build are still as unaffordable. I mean, it's not really realistic for people to build standalone single-family homes for less than $250,000 anywhere in the country. If you're on the coast, you're talking about $500,000, right? So home builders catching up with inventory, I don't think is a likely thing that's going to happen over the next year or two. There's also these investors that we showed you divesting of their portfolios, but that's something I don't see happening either. When real estate offers a greater return to investors than, say, bonds or the stock market, then they're going to stay in real estate. And there's another thing too. Real estate investment, even if it's flat or at a loss or simply the acquisition of it, is a huge tax boon to investors. And so the continued acquisition of real estate units is something that people may use simply to hedge their other funds. When you see, billionaires like Bezos starting a fund with seed money of $250 million, and that's just to attract other monies into it. So the intent is to raise a multi-billion-dollar fund to buy more real estate. When I see articles talking about Opendoor reducing their monthly acquisitions across the country to 10,000, right? These folks are not slowing down. The mega rich, the big investors are going to continue to add real estate to their portfolios. Now, there's a couple bipartisan bills that have been tabled that are intended to force investors, large investors, to divest of some of this portfolio or to outright ban them from investing in single-family residence. I don't see that as likely either, guys. I think that is virtue signaling from those particular legislators, and I think they're pandering to their bases and just trying to, stand on a soapbox and thump their chest in front of constituents because, the reality is these large bankers and investment firms who are buying up this real estate are the same people that own the souls of those politicians who are writing those bills. So I just don't see that as a realistic solution to the problem. Also in the bills that I saw, the cursory amount that I read, it was not like you have to divest over the next year. It was 10 to 20 year plans. So a slow trickle, right? The only other thing, the third and final potential solution I see to home values is the scariest, and that would be a job loss recession where economic hardship hits the country nationwide hard enough that people can't afford their home anymore and they have to sell as distressed sellers, similar to what happened in the Great Recession, the GFC, Great Financial Crisis, right? People couldn't afford their homes and they had to sell, and that brought prices down. So those are the only, unless those things happen, guys, I don't see home prices going anywhere. Okay. One final statistic I wanted to talk about was this one here. Let me find it. So let me share the screen. Over the past months, I have been talking about this particular line. Come on, man. This is the sale price to list price ratio. And I have talked about these numbers as if, for me, they were a leading indicator about what is going on with home prices. Are they appreciating? Are they depreciating? And I've been watching this like a hawk to see where things are, to try to get a determination as to whether or not we can have some sort of leading indicator as to price trends, right? And so when I was digging into these stats preparing for today's show, I found this line right here, okay? This is the historic sale price to list price ratio going back to January 19, okay? Pre-pandemic through the pandemic. Now, let me remind you guys that this is what's happened to prices since that time, right? They've gone up, 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 up. However, our sale price to list price ratio has continued to look like that. So what that tells you, boy, here is that this line, this H column, has been pretty worthless. And I've been talking a lot about it for absolutely no reason. So next week, this column is most likely going to not be included in the program. I was going to riff last week. I did the show topic was about 4 common misconceptions of buyers. And I was going to riff on that. I was going to turn it around and do common misconceptions of sellers. But, I really wanted to get, this has been something that I've been hearing so much about lately. I really wanted to address it. Hope that it brought some value to you guys so you have some greater understanding of what's going on in the market, why prices are where they are, when we can expect some sort of relief, and how we might see that relief come about. I will get to the misconceptions of the sellers. Now, I got a guest next week, so we'll probably wait a couple more weeks. But nevertheless, if information like this is helpful, guys, I'd love to hear comments about it. If information like this is helpful and valuable to you, please share it with your friends and family. And hopefully I see them back here with you guys in the upcoming weeks. All right, that's all I got for today. I'll see you next week. Take care of yourselves. Take care of one another. I love you, people.